So guys, every time the Nasdaq hits this exact standard deviation level, we see a massive rejection. And it just happened again yesterday. There's been an insane run-up in the market since the ceasefire was announced on April 8th, and there have been crazy opportunities in the last couple month and a half. But I'm beginning to feel that we might be due for a pullback or just some room to breathe. Here's why I've been thinking this. Here's the daily chart of the NDX, with the rolling anchored VWAP with 1, 2, and 3 standard deviation bands overlaid on it. As of yesterday's close, we right on the +3 standard deviation band at 29,325. So what does history tell us when price is at 3 standard deviations above VWAP? Well, let's scroll through it and take a look. And by the end of this, you will probably know why I'm leaning towards at least a short-term reversal here. So for context, just to understand market dynamics, you can see that towards the beginning of the year, we were comfortably between the +1 and +2 VWAP standard deviation bands and consolidated there for the whole of January, testing the 1 standard deviation band but failed to break lower. We finally did at the beginning of February with tax season inbound. What usually happens is you want to wait for a retest of the levels once it breaks through to get confirmation, as it usually doesn't follow through on the first attempt. Bulls or bears, whoever is in charge, like to retest previous established levels before confirming the direction. Then, in mid-February, after multiple retests of trying to break through the upper 1 standard deviation band, the market finally broke through to the downside. So what followed? We ended up in a confirmed reversal structure through March to when the ceasefire was announced. But look where the market bottomed. Pretty much exactly on the anchored VWAP. And since then, we just broke higher, which leads us to where we are now, at the upper +3 standard deviation band. So let's take a look and see when has this happened before and what does this tell us. The last time we were in this range for the Nasdaq was all the way 3 years ago in 2023. And let's analyze what happened then. The market tried 3 consecutive times to break through the upper 3 standard deviation band, and each time it was a point of rejection, before finally breaking lower. Alright, the one before that. All the way 3 years ago in 2020. Again, we saw the market trying to break the upper 3 standard deviation band in July 2020 and September 2020, and failed. The one before? February 2020 and the same rejection. Let's go a couple of years back to 2018, and we notice the same thing again. The market keeps reversing on the 3rd standard deviation band. Let's go back way further to see if our thesis still holds. We're in 2013 now. The market tried multiple times to break through in May 2013, but every single time was met by a rejection. We see the same thing yet again in 2012, in 2010, in 2007 that led to the global financial crisis. Finally, let's go back to the dot-com era and see if this played out. Here we are in 2000. We tried multiple attempts to break through, but this led to a rejection every time, with the last one leading to what is now known as the dot-com bubble. Now, from the dot-com bubble, if we are in an AI bubble, which I'm not sure of, but we see that the market traded for a couple of months between the upper 3 and 2 standard deviation bands before finally reversing. I'm not calling for an immediate crash, but we very well could see a reversal here or soon as valuations get stretched and hype is built up. I'm going to show you a quick view of the cues as well. Just be careful if you're planning on establishing new longs here and beware of FOMO. If you like this stuff and if this helped you, do like the video and subscribe to the channel, as I plan on posting more trading knowledge. Let me know in the comments if you want a similar analysis done on the S&P or SPY.